Yo, what's going on, guys? Welcome back to the channel. In today's video, I'm going to go ahead and break down two of the trades that I closed today for over 300% buying put options on both Tesla as well as on Twitter. My Tesla put option, I went ahead and opened today and closed today, just a 10-minute trade that made me over 100%. I used the 9 EMA strategy that I talk about quite a bit on this channel. So hopefully after watching this video, it's something that you can implement into your own trading. And the second one that I want to go over is my Twitter put options that I went ahead and bought for earnings. I'll explain why my Twitter put options did not experience implied volatility crush, something that you guys have seen quite often during earnings season, why these ones actually appreciated due to the size of the downward move that Twitter had. So before we get into these trades, make sure to go ahead and smash that like button for the YouTube algorithm. It'll really help out the channel and the video. And also make sure to subscribe to the channel for some future videos and press that bell notification so you know every single time that I post on the channel. Alright guys, it's Friday. I'm not here to waste any of your time, so let's go ahead and just break these trades down. So the right side is the 5-minute on Tesla, and the left side is the 1-minute on Tesla. The blue line that you're looking at is the 9 EMA, a strategy that I've been using for quite a while. If you want to check out how to use this strategy, I have some videos on the channel. I'll pop it up on the top right of your screen right now. So looking at this chart, I'm looking right when we open on the 1-minute chart. So we opened the day with a really big red candle on the 1 minute. So I saw this, I saw us retest this 9 EMA and fail, and then retest it again right here and fail once again. So we had two clear failures of the 9 EMA on the 1-minute chart. Now when I saw this, I was starting to get very bearish. I saw this rejection twice on the 9 EMA, and I was starting to look into some put options, looking for the stock to stay below this 9 EMA and continue to ride it lower throughout the day. So right here at 9:42 is when I got into this trade. So I'll pull up the Discord chat so you guys can see when I got into this. 9:42, grabbed a small 400 put on Tesla with today expiration, and it was $2.75. Now the reason I went ahead and got into a 0 DTE, a 0 day till expiration contract, is because I was looking for something pretty cheap, less than 1% of my portfolio, and something that had some volatility so I could get a really nice percent gain. So I got into those contracts at 9:42. Now I got into these contracts because I was watching this 402 support level, and I was seeing if we could break below that previous low and stay below the 9 EMA. So right here at 9:42, we broke below 402 a share right here, and we retested the 9 EMA and continued lower. So I got into that. I saw Tesla holding below this 9 EMA, and I was confirmed to be bearish on this stock. So I was right here, I was in the trade. We continued lower. These 4 consecutive red candles made this contract go up extremely fast, and I was only in this trade for 10 minutes. So just 10 minutes later, I was out of it with 117% return at 9:52. Now I got out of this because at 9:52 we started to see Tesla find some support. We had a few green candles, we had some bullish wicks right here, and I just went ahead and got out of it because I didn't want to get caught in a spike higher. You know, I'm up 100%. I have a rule for myself. If I'm up 100% on a trade, I'll usually start to take some profits. Now in this situation, I only had 1 contract, so I couldn't scale out of it. So I just went ahead and took my profits. Now, if I had 3 or 4 contracts, I definitely would have still taken some profits here at up over 100%. But at least I would have had 2 or 3 more contracts to ride a little bit further and try to take a little bit bigger of a move. Now, looking at this in hindsight, I obviously wish I would have not, took my profits, or I wish I would have taken more contracts so I could have scaled out of it. Because if you look at this, yes, it broke above the 9 EMA on the 1-minute chart, but that's why you always need to have this 5-minute. So you can see on the 5-minute, we never broke above the 9 EMA. We just consolidated, and once we retested that 9 EMA, we had a huge red candle and continued all the way down to $379 a share. So to learn from this myself, next time I would have liked to maybe take 2 or 3 contracts, scaled out of it when I was up 100%, and hopefully ride this down a little bit further and stick to this 5-minute 9 EMA strategy that I talk about quite a bit. Now, just to make this a little bit fun, I'm going to go ahead and pull up the Tesla call options the Tesla put options that I had, the $400 puts, and you can see how much these contracts really went up, which was crazy to see. So I got these at $275, which is right around here. I sold them around $9.52, so I sold them around $5.60, $6 for a contract, so a nice 117% return. But if you look at this from 10 o'clock on, it went all the way up to $21 per contract. So I had them at $275. This would have been just about 1,000% gain on these 0 day to expiration contracts. If you guys got into this, congratulations. That's a huge move, and you cannot get 1,000% gains anywhere else besides trading options. And especially knowing that I only had a max monetary risk of $275. So either I lose it all, $275, or I hold these contracts, and you could have potentially made 1,000%. So that's awesome to see. If you guys caught this, you could have used the 9 EMA strategy. It was quite easy to call out and quite easy to see. If you just closed your eyes and held this trade until it broke above the 9 EMA, you would have been in this trade all the way until 11:15. Not one candle broke above that line until 11:15. So awesome trade. Called it out in the Discord chat. I know a lot of you guys made money on this, so congratulations on the Tesla put options. All right, guys, so the second trade I want to go over is the Twitter puts that I went ahead and bought for earnings and why they actually appreciated in value and did not get crushed by IV. So Twitter had about a $5 move expected in the stock, about a 10% move on the stock to either the downside or the upside, meaning if Twitter only fell about 2 or 3%, then puts still would have lost value and it was already priced into the contract. So right here, $47 was where Twitter had to go down past 4 puts to appreciate. And what you guys can see is we had a bad earnings. We fell pretty quickly down here to 47, bounced around a little bit, and continued lower into the after hours and into the pre-market. And even today during Friday, continued even lower. So a really bad day for Twitter here, down way past 10%. And I went ahead and got into put options yesterday on Thursday. I got into 45 puts for 59 cents a contract, so $59 total monetary risk, an extremely small amount of my portfolio, but I wanted to try to get some really big percent returns and just have some skin in the game for this Twitter earnings. So call this out. I know some of you guys took this trade, so congratulations on this one. So we had the 45 put. What we can see is that Twitter fell all the way down. These puts actually went in the money at the time that the market opened. So this is the power of buying put options. You can buy extremely small put options, only risking a small percent of your portfolio. And we actually took over 200% on this trade. So 188%, I think by the time I closed them, they were about 200%. So a 200% gain on Twitter. And this is the power of the stock going past downside expectations and actually appreciating in value. So if you guys want to just buy calls or you just want to buy puts on earnings calls, you have to make sure it beats those expectations to either the upside or the downside. If it does, then you will make a good amount of money, but make sure you're not putting too much money into these trades because it really is a 50-50 trade. Twitter could have went up, it could have fell down, but not by enough. And these put options could have lost value. So a small trade, you can see why I only put $59 into it, but awesome to see another 200% gain. I'm really happy to see that this trade worked out. So that's all I have for you guys today. I hope you enjoyed seeing that Tesla and those Twitter put options. I hope you learned something from the psychology around those trades and why I got into them. You can implement that same 9 EMA strategy into your own trading. Check it out, throw it on the charts, and start testing out that strategy. I highly recommend it. If you guys enjoyed today's video, don't forget to go ahead and smash that like button, subscribe to the channel for some future option trading videos, and make sure to go ahead and check out the Discord link down below. It'll be the first link in the description below. If you want to join 1,200 other traders talking about plays every single day, talking about the markets and what they expect in the future, as well as see all of the trades that I take live, make sure to check that out. I guarantee you it will help out your trading. Go ahead and have a great rest of your weekend. Get ready for the presidential election coming up next week. It'll be crazy for the markets. I hope to see you in the next video. Peace.